right. Well, I should have used that one for the ringtone. The ringtone that's coming out. Good evening, everyone. This is DayTraderRockStar, and this is your high probability watch list for the week of September 16th. September 16th, next Monday. All right. It's Fed meeting Monday, or Fed meeting next week, Wednesday. And everyone's going to be talking about the taper. We're going to start off today because we had such a really good week, and I'm going to explain some things that are going on. Going into this past 2 weeks, we had the Syria issue kind of hanging over us. The tapering issue was kind of dying off, and then they brought the Syria into the forefront, and it was all about Syria, Russia. Now it's the Cold War Part 3. And knowing that, it was really hard to, see this market move higher. But, the setups were out there. So what I did is I really, put out a focus list that really dealt with quality names the last few weeks. Wasn't really looking at any tremendously, speculative movers and momentum movers. Basically, they were pure HPS setups going into the last 2 weeks on quality names, really off the HPS 40. These stocks that we continue to rotate back into because they're quality names. They tend to work great using the 5 indicators. And we just, there was so many good setups over the last couple of weeks that, technically the market said, you know what? The news was priced in, everything, and the market actually started reacting technically back to what we've been seeing, a great technical moving market. You have your downward movement, you have your upside movement, you have the bigger patterns playing out, you have the micro patterns playing out, but everything seems to be playing out other than when you get hit with just that little bit news. It was the taper news, or it was the Syrian news, which kind of puts a little spook in the market, I like to call it. And from that point on, the market usually adjusts back up. And what happened was we did get oversold. It bounced, came back down into an oversold level again, which I call a nice double bottom bounce on the stochastics, which is really good. And that's usually if you get under 20, push back above 20, and then come back under 20, and you see it enough where it shows a definite trend. It's much more important to see that move back above 20 and then come back down. That secondary bounce is usually good, and that's where divergences start to happen. When the stochastic does not make a lower low, but the price makes a lower low. And that's your divergence. And from that point on, we really rallied. And we continue to rally. And now we're embedded on the daily. And this is the SPY. This is the S&P ETF, the tracking ETF. And I use this because it gives me a good signal. It's kind of a very... first of all, you could trade it off of it. And it just gives me a better feel for the overall markets. So where we left off here, now actually we're starting to get embedded on a daily. Now this is a tough call right now because we're going to go into a week where we have the Fed meeting, the FOMC rate decision meeting. No rate decision, but really what everyone's expecting is a announcement of the tapering of the QE program. Now it's all of a sudden everyone's expecting something smaller than, it was never really put out there like what tapering was. But now someone has run with the... one of the options is a light tapering, something very small that the Fed is going to do, and this is probably most likely priced into the market. But again, it still is that area in the market where we normally do see these levels. We did have it back here where we dropped out. It was kind of it was a Fed statement. It came out. The market moves on these statements too. It could move up or move down, but it's going to be a volatile area going into Wednesday. And from this point on, everything here that I'm seeing right now is very bullish. Stochastics really going into its third period, which on the daily, that's how many periods you really want to see stuck up here. Really a tight consolidation. And inside here, you're actually starting to coil up. You're making one large range, bar range. You get a tighter one and basically a tighter one. And that's really just a kind of a good consolidation. And in this environment where you think everything's going on, the Syria thing, the tapering, now they're going to bring the debt ceiling back in forefront, the market's actually holding up pretty good. So combined with the stochastics embedded up here, I kind of like this market going forward. Recent highs are not that far above us. They're not that far above us. Goldman came out with a big call this week, end of the week. They said the next phase of the bull rally is going to push this market higher to new highs. And one other thing I want to show you is the weekly. And I went over on the weekly last week, And this is one thing that we learn about in the stochastics. We'd love to take that, and this is, remember, this is going out a weekly chart. Each candlestick represents, that week of trading. So it's a much longer time frame that this chart is playing out. And lots of times we see a coiled stochastic. What I call a coiled stochastic is where you have a lower high and a lower high basically grinding down. And the same thing here within a rising stochastic, where you can have a higher low grinding higher. Really defines a downward trend and an upward trend. Now on the downward trend, of course, you get that coiled up. Once it gets down to the bottom of the coil, it usually breaks free, and it's a change of trend. The same thing here, but in this case, on the daily or on the weekly on the S&P 500, this is a textbook flag with a textbook trend line on the stochastic starting to turn back up. This has one of the more very bullish patterns. If this was on the daily, I would take it on the daily. The weekly is such a long-term time frame that we don't really trade the weekly, but it does lie out there as a good vote of confidence for this market. I think if we actually saw this break down, that would also be a good signal. So I think we're right in a very sweet spot in the market. I think we're going to move up, but for whatever reason we break down, I think that would be a clear indication that we might actually correct a little. And I'm not playing both sides. I'm thinking that we are going to continue to rally and make new highs. So that's really good. And the setups this week, you cannot. I am still excited going into next week. I was fired up last week, the week before, because we have a great setups. Just on the HPS list alone. And then today, Friday, I posted about 3-4 more in the room live during the market hours, and some of them already started taking off. We're going to go over those tonight. Plus the ones that are set up. I think we have one of the best HPS watch lists going into next week. The carry out, just to carry over from last week. Just to give you an example, let's take a look at what we were doing for the month of September. All right, this is basically the first 2 weeks of the month, and we concentrate. These are the trades that have closed out. Now I'm still holding, a lot of good positions, and added to new positions, and starting new positions like I did today, and a couple of the new HPS sets. But you can recognize one common denominator in this list of stocks, and this is this is on the site. You can track the the performance and everything. This each trade that's taken. But just going back to the names here: Verizon, Google, Altria, Philip Morris, Church and Dwight, Target, Cerner, Verizon, to AT&T. Here was one, Silisa, a sand company, and it might not be a name that you recognize, but it was something I did my research on. I brought it to the table, and we took that position. And it was a long-term position. We held it for about a month, and got just holding 200 shares, 440, doubled them, pretty much made $444 on it. So it wasn't that. It was a good setup. It still looks great. Kroger, we had a scalp in that the other day after earnings and stuff. So everything gets recorded. But the quality of the names here is really key. And we could just continue on with that because those setups, and this market has been volatile, but it doesn't matter because we are seeing green on the screen. We're seeing green in the hole in the chart. So just, again, when you see the watch list this week, you're going to see a lot of the similar setups, and I think they're just golden. So I'm excited. Let's just jump right into that. We're going to jump into all the stocks right now. Some of them are closed out. Some of them I'm just going to review, but some of the new ones, of course, you're going to get. First thing we're going to do is we're going to review some of the trades that have closed out on the HPS list this week. So we're going to review those. And again, these are all found on the HPS list on the members section of Day Trading Radio. So these charts are already set up the week before for you, outlining the buy zone, the profit zone, and the stop. And basically, of course, through the methodology and stuff, and explained in a video that is sent out with these charts. There's an in detail video. We discuss what kind of setup this is, what to expect, why is it setting up, and the different key components of it. So overall, then we usually take that trade and and cash out when it hits a profit. And you can see today that actually hit its profit today, Brinker. and just a great setup. Absolutely fantastic setup. So we're going to continue to look at the next one. All right, here we had Cisco Corporation. This came out about 2 weeks ago, and I just didn't. You know what? I didn't take this trade. I just didn't feel 100% on it, and I just, again, I put out the technical analysis. I still put out the buy zones. What happens is this is all connected to the back end. When the prices match up with the buy triggers and the sell zones, it gets alerted in the system. You get alerted to it in the chat room. You get alerted in an alert box. You get sent an email instantaneous of the position or of whatever triggers being set. So you're not going to miss these trades, and that's the idea, is to really identify patterns. And that's what I like to use mostly with the HPS setup. Very rarely am I going to take a break. Well, basically say, well, you should be in this one now. I want to be able to find a stock before it gets to a certain area and to be identified to it when it's hitting that level, so I don't miss it. And then if I'm in it, I also want to be identified when it does hit a level where I feel that there's going to be some areas of resistance and stuff. That's on the buy side. Opposite on the short side. But in this case, you can see Cisco just went out a few days before it even got down to this level, and you can see it came right down to our buy zone. The alert went out, and you can see today it pushed right up here, and it looks like it triggered its exit email over the last couple days, or today basically, 32.90, 31. So again, if you're in that, you've received all those alerts. And again, that's not active anymore. And the last one here, well, there's a lot of other ones, but the other one I'm going to show you here is Target. And Target, you can see, was a stock we continue to come through. And look at this pullback in Target. I mean, this was like just given to us on a silver platter. A silver platter, this one's given to us. I mean, once we, easy enough to put out the buy zone, 64 to 63. I mean, it's off at $73. It's already down 10 points off its highs. It has to, where it's under the 200 period moving average. This was a no-brainer, in my opinion. No-brainer, in my opinion. And we click on that, and you can see it did come right down into our buy zone, and then boom, went right up to the profit zone. And a lot of times we'll take these things off on the when I'm doing the show, and I decide to take that trade off the table. It's because we have other indicators that we want to find rotate. Here's the weekly on Target, by the way. Weekly on Target, and this is just, I'm going off on a random tangent right now. The weekly on Target is excellent. Someone mentioned the weekly on Coca-Cola, and I really jumped on that, and that's what really got me very bullish on this. We have a big underlying trend line on the weekly chart. The last time this really came down on the weekly pullback, it was a great opportunity. It does not give you these setups too often, people. This does not, you don't get Coca-Cola rotating back up here on a weekly pullback very often. So this looks great to go. I mean, Target, TGT, looks great to go. Just getting oversold here. You can see the last time it got oversold. I mean, these things, unless we hit some kind of roadblock in the markets, and that's going to come from the political arena, these things are technically sound and ready to kind of just grind back up. I mean, we're not looking for a rotation all the way back up and a continuation. But the risk reward at this level right now, and we see what it is. I think it's a good risk reward area on a lot of different stocks. So Target, hit, and it was great. It was good setup there. And now we're going to go into there's other ones here. Let's go through a couple more, and then I'm going to go to the updated watch list for this week. But let's just take a look at some other stocks, because we did take some good setups here. And today I'll tell you a couple interesting ones. Today someone mentioned, why are you getting to CBS? Well, CBS, here's one that's really very strong. Weekly chart actually looks fantastic too. Look at how this is crossing back up. We have a series of higher lows, and we just crossed back up, and weekly on this is breaking out. I mean, this thing looks so good. So today I got into it. I picked up 4 calls and 100 shares, and this is going into this weekend. There's a big fight, and it's not going to do you any good now. But if you were in the trading room today, this is the alert you got. You got the alert that I told you about the fight and stuff, and I sent out the alert and why I thought this thing would gap up on Monday. And I think that's kind of under the radar of traders, because I don't think the average trader is a big boxing fan or understands the dynamics of CBS owning Showtime, doing this thing with Mayweather for the first time. They kind of stole it from HBO, and now this fight coming up this weekend has the potential of breaking all box office records. So if that is hyped enough, and they actually do break the records, I mean, I know they're charging me like $67 to get it, and I know I'm not going to miss it. I got to figure that this is a big, major fight. People have been dying for it. I think people are going to pay up for this. I think it's going to break the record, and that's going to come back and say, "Wow, all-time records broken in pay-per-view over the weekend. CBS Corporation, division of CBS, Showtime, and CBS gets that gap up." So that's basically why I took that thing. But again, it's another way of trading. Sometimes you want to trade current events that might be under the radar. You know how to trade an Apple event. You buy into the event and sell it when the guy walks on the stage. Well, it'll be interesting. So CBS is one that we picked up today. But just going back to looking at some of these older stocks that we have no longer in, AT&T, this was an HPS setup, double bottom, oversold on the stochastics. We had a nice pop on that. That was bought that at 33.67, sold at 34.40. It's at 34.32. And why do we get out a lot of these? It's because of the 60-minute rotation. Why do we get into this? This is what we call a DayTraderRockStar playbook play. It's a coiled stochastic channel setup. I bang the table when I see this setup, and we got some setting up this week too. But this is, I just outlined this for you. I said, people, man, you want to get into this. I mean, this is just textbook. Downward channel, coil stochastics, boom. I mean, I hope you realize that this is always standing chart bounty. Chart bounty means if you find a setup like this that I haven't seen, you bring it to my attention, and I take the trade, I want to give you credit for it. I want to say, hey, I just got this. This just came in from profit taking. It's a great setup. This is too good to pass up. I'm getting into it. And, if I get into it and make money, I want to, PayPal profit taking, a tip, for sending it my way. It's relative what I make on it. So it's a chart bounty program. You send, you help me with the research sometimes, something I'm missing. I'll pay you for it, This is one of the setups I would love to find all the time. It's a rare setup. But when you find it, this is what you get. You get your money's worth. It's worth it for me to find these. And, we could go right down the line. I mean, we crushed the market on HPS setups the last 2 weeks. Look at the CHD. It did break down out of this level, but we picked it up right here. And it was oversold, basically. A nice oversold level. Boom! It just shot right back into the channel. Probably, that's probably not a great trade for some people. Some people might have got into here and got shook out here. I happened just to catch it here, so it's not like it was a luck thing. I was looking at this level too, but I passed up on it, and then we noticed it dropped. I said, let's wait for the follow through, and we got a second down day, and that's where we got in, and it was just an instantaneous. It's still going back up. Again, of course, the target TGT. We already went over that, but that was a great HPS setup too. And God, it was just so many good ones. Cerner, CHP, Philip Morris, and Altria. It's typical downward channels here. The coil stochastics, oversold. I mean, these are the things we just constantly look for. Today we had so many good ones. About the Google. Google was a coil stochastic setup. We took this one. What did we get out of Google? We got bought it at 853. Sold it at 869. All right, 853. All right. So why did we do that? It's 853 is right in this level here because we came back down here on the stochastics. There was no doubt in my mind that this was a coil stochastic channel setup. We have a 1, 2, 3 channel. We know how to build a channel just by taking 3 pivot areas. You don't have to wait for a fourth one and say, oh, there's nothing down here. How are you drawing that line? Most things channel out. If you could get yourself a guiding line here that continues to move down and just say, I want to draw a parallel line to an area down here. And, as it gets down there, I want to buy off of it. Even if it didn't get down here, here's your first big indication, the coiled stochastic. So as this kind of turned down, I took that position. I took this position. I felt that, we're in a good risk-reward area. It's never a pinpoint move off of this level. Once you get down in a channel like this, you have to start giving yourself a window of opportunity. And that window of opportunity usually comes into the halfway mark of that channel. And understand, especially if there's a consolidation area there, you want to just give yourself the benefit of the doubt, especially if this is all oversold, because the market's not going to wait up for this. This is a powerful setup, one of my best setups, and you can see the results on that too. And now, again, what we want to do here is just wait for the next setup. I like Google, but there's so many good setups coming your way on this video. I'm going to get to them right now. For those of you who are interested in the other part of this video that goes out to members, because this will be as far as you get, come over to Day Trading Radio, daytradingradio.com, and the show's running every day, and check it out. All right.